Alrighty, my friends, so let's dive into the cash budget. But before we solve the problem and I walk you through the solution for the case, let me just start off by discussing the theoretical pieces of the cash budget. So, what is a cash budget? It's simply a budget that shows the anticipated cash flows in a company. It is considered one of the most important parts of their preparing your budgets or your master budget. So this cash budget will show different sections. It will show your cash receipts, where is our cash coming from, your cash disbursements, where is our cash going, and another special section called the financing section. And I'll talk more in detail about each of these sections. The cash budget will also show pieces of information such as the beginning balance of your cash balance and also your ending balance of your cash balance. Alright, so speaking of the receipt section of the cash balance, this section will include the expected receipts from your principal sources of revenue. So, for example, our cash collected from our sales and cash sales or credit sales. Also, our anticipated or expected cash received from other sources as well, such as interest or dividends, and so on and so forth. Other investments or selling of other assets and other or shares and things like that. Our cash budget will also, in the disbursement section, that disbursement section will include the expected cash payments. This can be cash payments to direct material, direct labor, income taxes, manufacturing overhead, and so on and so forth. And then the financing section, this section will show any expected borrowings that the company might need to make in order if they are running low on cash, or any cash repayments, including the interest as well. So the idea here is that when you're preparing the cash budget, prepare it in sequence. Make sure that you always start with the beginning balance. So the ending balance in the previous period becomes the beginning balance in the current period. And then obtain information from other budgets and from management and from other sources. So if you recall, as I was preparing each of those budgets, I was preparing a schedule of cash receipts or schedule of cash disbursements or cash payments for for many of our expenses. So we're going to be using all that information to complete our cash budget. Usually it is prepared for the year and it is prepared on a monthly basis. So in our case, we only have 1 month to deal with, and so that's what we're going to use. Okay, now what is the basic format of the cash budget? As you can see, that's what the format of the cash budget looks like. Prepare it in sequence: the beginning balance, add any cash receipts, and then add those two together. That will give you the total cash that is available. Subtract any cash disbursements, and you need to itemize these things. So individually, your cash disbursements, list them individually. And then once you subtract those, you will know if the company has excess cash or if there's a deficiency. If there's excess cash, then the company is doing okay. If there's deficiency, that points out to the need for the company to go and borrow funds from the bank so that they can continue with their business. And then, of course, once you've taken care of your cash receipts, cash disbursements, and your financing, then you have your ending balance. That ending balance is what will show on the budgeted balance sheet when we prepare the budgeted balance sheet. Okay, now with that said, let's now dive in back into our problem and solve the problem that is provided in our case. Alright, my friends, so here we are. Let's walk through the case and the problem that's provided us and prepare a cash budget for staff flyer. Alright, so let's begin with the skeleton that I just showed you earlier. We said you start with your beginning balance, and to it you're going to add your cash receipts, and your cash receipts will be itemized. Okay, And then you're going to get what you call the total cash that's available during the period. You will subtract your cash disbursements, and all your cash disbursements will be itemized and listed individually. And then when you subtract those, you get to either excess of cash or a deficiency of cash. And then you have your financing here if you need to go and borrow money from the bank, and then that will give you your ending balance. So now, using the facts in the case, let's now populate our cash budget. So our beginning balance will be collected from the balance sheet from the previous period, and we said that cash was 2 million. We'll add our cash receipts. Our cash receipts in this case came from a single source, which is from your sales. And when we prepared our sales budget, we also prepared our schedule of cash collections, and we said in November the cash that will be collected was 22,320,000, and so that will give you the cash available of 24 million that this company has. And then for our cash disbursements, all right, so we'll list them one item at a time. So we will start with our direct material. We paid for our direct material, and our direct material, if we go to our direct material budget, we said that the direct material will be paid a total of 7 million. Remember, the 2,700,000 is from your direct material that you purchased in the current period, and then we have this 5 million that was payable from the previous period. So for raw material, those were our direct material payments. And then we had direct labor payments that we made. 100% of the direct labor was paid in the current period, if you recall. So we will go to our direct labor, and we said in November all direct labor was paid in the current period, so 4.8. And then the next one will be manufacturing overhead. And so again, we said manufacturing overhead, all of it was paid in the month, in November, so 1,047,000. We had administrative expenses. And so our administrative expenses, we also said they were all paid in November, so 1.9 paid for in November. So we don't have any more disbursements from the current expenses, but we know that we also have income taxes from the previous period. So in the previous period there were income taxes, and we get that from the balance sheet. So if you go to the balance sheet, there were income taxes that needed to be paid, 1.5. And so our total disbursements then were about 16,721,000. So this company had more cash, excess cash. Okay, so excess cash of 7 million, 7.5, almost 7.6 million. So this company did not have to go and borrow, and so they were doing good. Now let's suppose that, let me just create a scenario here. Let's suppose that the company spent 8 million on direct material and they did not have enough cash. So if they did not have enough cash, the company would have to go and borrow money from the bank. And so normally management will sit there and say, okay, we have to go and borrow, but we need to maintain a certain amount in the bank account. So let's say the manager for Starflyer says, we want to maintain $1 million in our bank account. So what they would have to do is they would have to borrow to cover the deficiency and also to maintain that 1 million. So Starflyer management would have to go to the bank and get 1,401,000 from the bank. That's financing, so that they can cover the deficiency and also have a balance of 1 million. So if you run into a problem that is like that, and you have a deficiency, or the balance that is left is not equal to what the management wants to maintain, that excess has to be borrowed and you need to put it in financing. Alright, so in this case it was straightforward. We didn't have to do that. There's enough cash for this company. So that's it, my friends, when it comes to the cash budget. Again, just summary. What's a cash budget? It shows the balance at the beginning, any cash receipts from your sales or other sources, any cash disbursements deducted, and then the financing section, and finally the ending balance. This is the ending balance that you will see on the balance sheet when we prepare the next budget. So therefore, my friend, let's take off and go to the next budget, which is going to be our last budget, which is the budgeted balance sheet.